Hello traders, this week's most anticipated event is about to take place, and of course we're talking about the EU referendum. When I see the technical outlook of the British pound ahead of the event, and I must admit that it looks strange and ahead when I say that everything is possible. Looking at the weekly chart, we can see how the previous week's rebound with this candle here continued with a larger gap here and an even larger candle this week. This is more than 400 pips candle, which is an extremely bullish signal for the pair. On the other hand, as we can see here on the weekly chart, we see that prices have reached the level of the 55-week SMA, which has proven to provide solid resistance since May. Since June 2015. This is 1 year. A period of 1 year. We see several attempts of prices to move above this SMA, and then an acceleration of the downtrend because they were rejected in this attempt here. Now we have another attempt from the lows to break this SMA, and the question is, will the pound break above the SMA and continue towards 144 week SMA, or it will be rejected again and we will have a strong reversal to the downside that will bring us to new lows on the weekly chart. So for now we see that the rebound is strong. The weekly RSI has finally pushed above the neutrality area, but we have the resistance of the 55 SMA, and also we see that prices are facing the resistance that that was prior support in 2013 and in 2009. This level here should provide resistance, but the importance of the event is so big that it is possible that it will be broken to the upside. Going into the daily chart to see how this rebound fits on in our broader Elliott wave count, and so far we're counting this choppy decline from here as wave 1, and this was a wave 2, and we had a wave 3 to the downside, and then we were expecting that this whole move was a wave 4, and thus we were expecting the continuation of the downtrend from here. So the extent of the rebound forces us to question the validity of this count, because we're just a few pips away from invalidation of this count, since wave 4 is about to enter the territory of wave 1, and this will invalidate one of the rules of Elliott wave analysis. So we are forced to look for some alternatives, and the ones that are easily visible to the naked eye is that we probably have 1, 2, 3 that ended here, not here, and a 4 and 5 here that completed wave 5 blue here, and a much larger downtrend, and thus this is the beginning of something much bigger. On the other hand, since the count is not invalidated yet, we may not see a new high here, and thus a continuation of the downtrend from here. And although the whole count will look odd, it will not be invalidated in terms of Elliott wave rules, and thus it will be acceptable. There is also another count that is much bigger, much more bearish, that would suggest that we had indeed finished 5 waves here, but this whole move is just wave 1, and this is wave 2, and then we have wave 3 to the downside. That will eventually bring the pound below parity level in the future. I don't particularly like that count, but it is still a possibility. I would also like to talk about some other technical patterns here. It is indeed difficult to count this move here as an impulse. We will have to accept that we had a wave 1 somewhere here, and then A, B, C for A, and something like I don't know, A, B, C for B, and A, B, C for C, or since they are 3, 3, 3, it is probably W, X, Y, but I don't particularly like this count either. So if this is the correct count, then this is a wave 3 to the upside, and it will continue higher towards at the first target 160. But on the other hand, this move fits better into a corrective mode, a correction, and thus I would prefer to see prices to decline from here. Drawing a Fibonacci fan from the high till the most recent low, we see that the rebound occurred exactly at the 38.2% of this fan, and then we had resistance here, and but we will need to see prices reverse below this 61.8% fan in order to gain some confidence that this is indeed a bearish formation for the pound. For now, prices are above all SMAs that have concentrated around this level, and as long as prices remain above those, the long-term scenario, the long-term outlook, on momentum favors the midterm. The midterm momentum favors the bulls for the pound. Going on the 4-hour chart. We were examining several scenarios before this one, but the break above this high here invalidate all of them, so we're looking for an ABC pattern. And if we look into smaller time frames, we will see that here we have 1, 2, 3, 4, 5 waves from this decline, and therefore we're expecting at least a correction lower here before continuation to the upside, or in case that our primary scenario is correct, this will be the end around this level, the end of wave C, the end of wave 4, and a continuation of the downtrend to new lows from here. Looking at the 1-hour chart to conclude with this video, this is where we can see that we have 1, 2, 3, 4, and 5 that is probably taking the form of an ending diagonal, something like 1, 2, 3, 4, and 5, something like that. We would like to see a truncation here, which is a very bearish signal if this is to continue to the downside. So far the only thing that we see is that something that looks like a 5-wave move to the upside, and some divergence between the price chart and the 14-period RSI, which suggests that it is possible that we will have a bearish reversal. But as I said, for now everything seems to be bullish for the pound. not a very clear picture, not a very clear formation for traders to trade, and given given the new requirements of the traders and the volatility and the risk of that volatility to your account, it would probably be a good idea to pass on that and not trade the event, since it is not much better than a gamble at the current point. That's from me. Thank you for watching, and see you soon.